Hello everyone, welcome back to FX Spiders. Today I'm going to be I'm going to be explaining and constructing the perfect strategy that smart money use. What I mean when I say smart money, I mean the banks, big institutions, and yeah. So firstly you need to ask yourself, who is smart money? Is it a company? Is it a person? Is it a capital or what? Well, on the forex world, smart money are companies, they are big institutions, they are banks that has access to a lot of money, millions if not billions of pounds. Okay, so that's smart money. These are people that get involved in the market, and you see big moves like this, and this flash crash and flash rally. So this is all smart money is doing. So nobody apart from smart money could make this market pump like this. So no way, even this. So everything in the market is calculated. Yes, everything is calculated. So if you watch this closely, banks don't trade support and resistance. Banks do not trade trend line. Banks do not trade. Banks don't trade trend lines. No support and resistance. Banks do not trade psychological levels. Okay. So I might say it's an algorithm system. Yes, algorithm system. Perfect. So the first step in trading alongside the banks, trading like the banks, is understanding structure. So first, let's let's look at this. Oh, sorry, that was just a notification from myself. From myself. So quite alright. You must not do that. This has been a nice trend, a nice downtrend, and this is why. Let's say this is where people get confused. We've got two type of structure. We've got the macro structure and the micro structure. So according to the big boys time frame, according to the macro structure, according to macro structure, this is an impulse corrective, and we're expecting a drop to complete the impulse corrective pattern. So that is what I'm saying. And inside that this big leg, we've also got the structure, the micro structure, this the structure with no disturbance and no violations. You know what I'm saying? If you've watched my microstructure video, you definitely know what I'm saying. And all of a sudden, this was the breaking structure. Broke the structure, broke this lower high, broke this lower high. Sorry, higher low. Yes, this is a higher low. This is a higher low. So broke this higher low, and now we're expecting, or we're seeing more pushes towards the upside. So according to the microstructure, this is a corrective, and a corrective from a daily time frame can this since May, and we're in, we're in September. So I still want the market to continue like this for a short period of time before the drop. So let's look at the structures from here. Impulse, corrective, higher high, lower high, higher high, lower high, higher high, lower high, and we want to see this clearing this. So the idea of higher high and lower high, let me turn this thing. Why I use this path tool to explain is because it's very easy, and it's also helped me during my days when understanding market structure. So I use this and protected low. This PT low means protected low. So every swing here is my protected low. Sorry about this. Oops. So yeah. What what is wrong with me? I'm sorry. So protected low, and this is also a protected low. And we've got what we call liquidity. Liquidity is obviously it's money in an obvious way. It's just liquidity means money in an obvious way. every swing high and swing low has money resting on them. So every swing high and swing low is liquidity. So, and also equal highs and equal lows, like the double top, triple top, the M pattern, the trend line. So all those are liquidity. As we continue to grow on this channel, I will drop videos on all this in depth about liquidity concept. So right now we're just dealing with just liquidity swing and protected high and low, protected swing and liquidity pool. So this is another picture perfect. So in an uptrend, the higher high, every new higher high is a what? A liquidity pool, and the lower highs are the protected swing. Yeah. So this is the liquidity high. So and now this is what I like to call my spider's range when I've got my liquidity pool and my protected swing. Oops. Sorry. So perfect. So let's get rid of this path through so you can understand this in depth and more detail. So now what, it's quite obvious we want to see the market trade above this previous high. So let's go to the daily time frame and understand what is happening from the liquidity pool down to the protected low. So from the liquidity pool, we had this rally, this massive rally, leaving tons of imbalance in here. And if you don't know imbalance, all right, let me tell you imbalance. Imbalance is simply week to week. There's a week. If you can see that clearly, th- that is a week. So this week to this week, leaving space, only body. See, leaving only the body of the candle inside, within, or I say yes, in between them. This is a space. This is efficiency in the forex market. So this move happened so quickly that uh many people didn't get to sell in the market. Okay, and also it's like a market gap, and you need, and we want to see it filled. So apart from this, we've got many imbalance too. We've got this. Oopsie. We've got this to this. It might be small, but yeah, it still counts. And this to this, this to this to this. So tons of imbalance rest above here. We want to see this market trade above. So understood. Yes, understood. And the final destination is just seeing the market trading above here. So the market was trading. We had this aggressive push towards the downside, leaving tons of imbalance, and this pull, then this pull, and this rally that what the book structure broke this protected high, and this is now the new protected low, and we still want to see the market trade above that point. So this is a protected low, and I'll just add this PT low. That's my protected low. If this market wants to continue trending towards the upside, then it will not violate this low. Understood? Yeah, understood. So now the idea of old blocks. Let me use the drawing board. Let's say this is a downward trend. An old block is the last down move before the leg that broke structure at the top or at the bottom. So let's use the chart and see. This is let's see, sorry. The falls, you can see it anywhere. I just want to use something mm, something really nice. I feel like let me something really polite, yeah. So let's use this roughy area. So an order block now is this last up move, this last up move. Sorry, this last up move before this leg that broke structure. Where's the break structure? BOS. This is what the break of structure. So this last up move, why I say up, once I kept saying up move is because this is a 4 hour time frame and uh, it's quite big. I cannot use stop. I'm coming. There's no way I'm dealing with this type of stop loss. Ooh, 38 pips. No way I'm dealing with that type of stop loss. This is actually something big for me. I look for entries. So all my trades should be at least 5 or less. That's how I trade. So 38 pips is way too much, and it's a big move. So in a much lower time frame, this candle, this blue candle, is not just a candle but a move. So this institutional candle from the 4 hour time frame is actually a push. It's not just it won't be a candle in the 1 minute time frame. It will be series of candles, right? Yeah. Yes, it will be series of candles. So this was the last down move before this whole move that broke structure. And what happened? The market went back inside the move, inside the zone, and traded below. So you can do your own back testing and you know understand wood block. And nevertheless, don't worry. I have I've listed the videos I'm going to record. Listed video I will be posting on YouTube, and I'll go very deep in audio blocks because yes, it's everything. It's really everything. Shout out to ICT for bringing this concept. And sorry about this. Sorry about this. If you're really interested in, how I trade, you want to trade the way I'm doing it, and you better join the mentorship. So without further ado, let's continue. So now you understand all the blocks. The last down move or the last move before the move that broke. The last institutional candle. How do I put this? So in this scenario now, the last down move before the up move that broke structure. This was a break structure. And here the last down move before this move that broke structure. You can see how perfectly the market is coming back inside all these order blocks. Inside all these order blocks. And the order block that is left unmitigated here is this one. This last. Yep, this is the order block that is left mitigated. This is the only order block that is left unmitigated. Here, this is the only order block. This last down candle before this push that broke structure. And why am I choosing this order block? What makes an order block valid? Imbalance and also volume. There's this look, those rapid push after this order block forms, and you can see imbalance in this. Imbalance that we want to see being filled. So we want to see, oh, there's a very huge one. So we want to see the market trading back inside, feeling this inefficient, tapping in on the OB and continue the move. So this is my analysis. And now let's go deep and you see how I enter trades. So as I go deep to like our time frame, many things will start making sense now. Inside this whole zone now, you might refine this, but this has already been tapped because after this, it has already been mitigated, or almost 50% of it. So yeah, so I'm not taking this no more. I'm changing my POI to this last down candle before the up move that broke structure. Perfect. So the market is currently here. So let's look what's actually happening. Go to the 15 minute. All right, perfect. So this is a picture perfect breaking structure. And where's the last down move? This is where the last down move is. You can use this, and you can also use this. Perfect. So this now I've got three POIs. This is my point of interest. This is my for of an hour point of interest, 15 minute point of interest, and a 50 minute point of interest. So what I'm going to do now is to wait, just patiently wait for price to trade inside my zone and give me so maybe Wyckoff or shift in structure in a lower time frame. Then I'll load on my trade. So I've already analyzed this, okay, and my initial my is my this is my POI. Yeah, this is my POI. This is the last down candle that made all this move towards the upside, and since then price hasn't traded inside the zone, and orders are left mitigated here, and we've got tons of imbalance in here. So I'm sorry, I will set my buy limit as soon as the market opens. Set my buy limit. So this is Sunday, and this is what I do on Sunday. Analyze DXY first, but I don't have time, so yes, I cannot analyze DXY for you guys. So that will be my entry, and I'll just keep my stop loss should be just there. Yeah, but you know how it is. I give it a little bit of space when I'm entering the trade because of commissions and spreads, and you don't want your broker taking you out, and you don't want to miss the move. So as my target, so you could target here as your first TP, yes, because that's my first TP. That is where I will be taking partials. That's my first TP. And overall, remember, this is an overall. Perfect. This trade, if this trade runs, this is a beautiful coming 1 to 96, and this is massive. This is massive. If you want to understand how I do this more, if you do, perfect, congratulations, just move on. But if you don't, and so the 233 pips, sorry, it's not up, 200 plus, and that is the final target. So if you're really interested in trading with my team, trading like me, you've watched the first video where I posted my, and in this video I'm going to drop the Telegram group, the Telegram link in the description, and also what that's all. Okay, so message me on Telegram and Instagram. So that's the only place you can get access to me. So contact me and get yourself added, because every day I send my market breakdowns. Every day I send analysis in the group chat, and also we've got the Sunday. So and every Sunday it's a Zoom call for the team. So nonetheless, guys, make sure you enjoy trading and make sure you have a blessed week.